Hello traders, to another crypto market update. We've got a jam-packed video here for today. We're going to talk about the halving of Bitcoin Cash, what happened post-halving, and then what we could actually extrapolate out of that in terms of the information we gained, and then how we could potentially project that information and view BTC after the halving, and what kind of that means for our trade plan and our outlook and our bias for the upcoming month of May here, because that's when the halving is set to be actually taking place. So, like always, we'll get right into it here. First things first, let's talk about BCH, which is Bitcoin Cash Post Halving. 2-hour blocks hash rate hit, so we can talk about it right now. Not even a day has passed since Bitcoin Cash Halving hit, and already the hash rate has taken a hit and block generation slowed significantly. Many predicted that at least some miners would abandon Bitcoin Cash and move to more profitable coins like Bitcoin after the rewards were halved from 12.5 to 6.25 Bitcoin Cash. But as hash rate rise and fall each day, the data for BCH is open to interpretation. So basically, when the actual halving occurred, the amount of revenue that these miners could generate basically got cut in half, because the amount of the rewards that are going to be distributed to the miners every 10 minutes is going to be basically cut in half. So then the revenue for all these miners is basically going to get cut by 50%. So then they're going to look for other assets to mine with their mining rigs. So then instead of getting half of the revenue for Bitcoin Cash, they could go and mine Bitcoin and get what you could, I guess, say is a more rewarding mining opportunity, because the BTC halving has yet to occur. It's about 1 month away. So they have a month time where they could get more reward mining Bitcoin compared to Bitcoin Cash. And we saw that huge leap of miners go from Bitcoin Cash to Bitcoin, thus really significantly decreasing the hash rate, because with less miners on the network trying to mine for the same amount of reward, there's going to be less competitiveness and less competition for that same amount of reward, reducing the hash rate. And hash rate is the difficulty. So we can see right here, fork.lol shows a 60% fall in BCH hash rate. That's crazy. We were talking about Bitcoin's 16% drop, thinking that that was a lot. And BCH was a 60%. That's a huge decrease. So in a report published April 1st, Arcane Research said that there was a real risk the hash rate would have along with the cryptocurrency, anticipating volatile days coming in the halving and in the immediate aftermath. And that's kind of what we're looking for in BTC as well. We aren't expecting a massive bullish move after the halving. We're actually expecting a dump, because the rewards, the revenue for these miners are going to get cut in half. And we already know through our production cost indicator that a lot of these miners who are not very efficient are already losing money. They're already basically mining BTC the same amount as it costs, or actually less. So they're either break even or they're losing money. And with the revenues cut in half, obviously many of the inefficient miners are unsustainable. And then there's some information about the actual block taking 2 hours to generate. It usually takes 10 minutes, so that was definitely a long time to actually produce a block. And then we can see this is some more kind of speculation of what could happen for BTC, bears and bulls for Bitcoin Cash after the halving. Though some are merely focused on the price, many are concerned about what exactly will happen to the hash rate. While some BTC miners may abandon the coin to get a better profit mining on BTC, Bitcoin Cash miners have proven in the past that they're willing to lose major capital to keep the price up, as they did in the hash war of 2018. A blockchain lawyer on Reddit summed it up as, the only thing keeping BCH afloat right now is crypto socialism and irrational miners. So yeah, definitely not looking great for BCH, and it's not like it sets it up perfectly, because Bitcoin is obviously the most well-known network with the most miners, the most reliable network, I guess you could say, and they won't really have this problem, in my opinion, in terms of people leaving to mine another cryptocurrency, because Bitcoin is the end-all be-all king of the crypto market, as of so far. So I don't think we'll see that, but I do think that the drop in the reward will create a significant problem for a lot of these miners who are barely able to make ends meet paying for their expenses, if not losing a little bit of money digging into their BTC treasuries. So let's dive into the actual halving for BTC. We have 33 days. This is estimated 16 hours and 18 minutes. It's estimated that it's going to be on May 13th of 2020. It could change a little bit. It's not going to be an exact date. It is a number of blocks that are mined, and we can see there's 210,000 blocks that are mined for the halving to take place. So we can see, let's just read a little bit about it. What is a block halving event? As a part of Bitcoin's coin issuance, miners are rewarded a certain amount of Bitcoins whenever a block is produced, approximately every 10 minutes. When Bitcoin first started, 50 Bitcoins per block were given as a reward to miners. After 210,000 blocks are mined around every 4 years, the block rewards halving to keep the halving until the block reward per block becomes 0, approximately by the year 2140. So there's going to be a time where there's no new Bitcoin coming onto the market, and that would mean that there's no more supply getting introduced from the miners into the market, thus pushing the price down, right? Right now, miner capitulation is just an increased amount of supply due to the inefficiency of miners. But if there's a point in around 2140 where there is no more new Bitcoin coming into the market, the only supply that is going to get introduced into the market is going to be individuals selling due to speculation or thoughts about, the potential of the price going down, but there's going to be no new Bitcoin getting introduced. So it's extremely deflationary, which means as long as the demand continues or remains the same, the price will go up because the supply is fixed at that point. As of now, the block reward is 12.5 coins per block, and it will decrease to 6.25 coins per block post-halving. Remember, every block 210,000 blocks are mined for the halving, and we're seeing 12.5 coins mined per block, and then now we're going to 6.25. So yeah, cut in half every 4 years. Now, why is this? Bitcoin was designed as a deflationary currency. Like gold, the premise is that over time, the issuance of Bitcoins will decrease and thus become scarcer over time. As Bitcoins become scarcer, and if demand for them increases over time, Bitcoin can be used as a hedge against inflation as the price, guided by the equilibrium, it's bound to increase. So yeah, I completely agree. It is a hedge against inflation for sure. Right now, I don't think that it is a safe haven asset like many do believe as of yet. I think that the US dollar is still strong enough for people to deem it as a safe haven asset, and it will take a lot of aggressive action from the central banks to kind of overreact to the current economic situation we're having, and then kind of changing the bias and the thought process of the US dollar, thinking from a safe haven more to an inflationary asset due to the overreaction from the Fed. But as of now, well, we don't really see inflation yet. CPI numbers are actually negative, meaning there's actually deflation going on in the market. Let's continue reading. On the flip side, fiat currencies like the US dollar inflate over time as its monetary supply increases, leading a decrease to purchasing power. This is known as monetary debasement by inflation. 100% look at the value and the worth of the US dollar back in 1912, or really even any decade before now, and it's gotten less and less and less and less value over time. Whereas if you look at Bitcoin, it is the polar opposite. It is gaining more, you can buy more goods and services with Bitcoin over time. If you had $100 and you kept that $100 from, let's say, 50 years ago, that $100 is going to be worth a lot less now. But if you bought Bitcoin, let's say 5 years ago with that $100, obviously you'd be doing very well compared to that same amount of money just held in US dollars. So there's definitely a need for this type of technology, especially with the central banks printing so much money right now. Predictable money supply. Oops, let's just go back here. Since we know that Bitcoin's issuance over time, People can rely on program control supply. You cannot have this for any central bank. They can print as much money as they want. There's no limit to the amount of money that they can print. They can debase the currency until it is completely worthless. And in previous economic cycles, looking at, for example, Germany, in between World War I and World War II, or even Rome, like hundreds and hundreds of years back, we can see that in almost every single economy, if there is a small group of individuals controlling the money supply, they will debase the currency because it is very powerful. You have unlimited power when you have the ability to print money on demand with the snap of a finger. You can create value, what seemingly looks like value, at the beginning, but over time, the amount of circulation supply is going to be so significant that the purchasing power of whatever you're using as a currency will go slowly down. And then the people that are using the currency are going to get affected very negatively. If people are savers, they're the ones who are going to get hit the hardest because they have their US dollars or whatever they have as currency in their bank account underneath their mattress. And, if the number of circulating supply increases by 4, 5, 10, the value decreases substantially. You can buy less with the amount you have. Very, very bad for savers. Let's continue here. Who controls the issuance of Bitcoin, right? And the Fed, it is the central bank, right? That they control interest rates and the amount of money in circulation, the monetary supply. We have no say as citizens. We have zero, right? So who controls Bitcoin? The network itself controls the issuance of Bitcoin, derived by consensus through all Bitcoin participants. Oh, wow. You don't hear that coming from the government. The government's, we got this, you don't worry about it. This is too confusing for simple citizens to understand. You just go be good workers, good consumers, and spend that money, get in debt, and we'll take care of everything. Don't worry, don't look underneath the covers. And just don't look around because we have everything covered. That's what they want you to believe, in my opinion. They don't want people sniffing around. They think that they have all the power, and they want citizens to just go to their job, be good citizens by consuming as much as they can, and keep that economic gear turning. But yeah, Bitcoin's very opposite. There is going to be a strict algorithmic code that is going to be the issuance of Bitcoin. You don't have to trust a human being, right? Human beings can make difficult choices and wrong choices. Like looking at the overreaction from QE, it worked really well last time, so they're just going to try some new stuff with more QE now, right? They're just trying stuff. It's not like QE is proven to have worked over centuries. They think, oh wow, 2008 QE worked. It must work in any circumstance ever. So then if there's any recession that's ever going to take place on United States soil, they will just print money and either bail in or bail out, right? Whatever the case may be, but they're printing money and giving it to either individuals or large corporations that are too big to fail. But, they're doing both right now, and they'll just continue to do it, print more and more and more and more money until it is completely worthless, and they're going to have to find some sort of new monetary system to take over the current US dollar. And it takes a long time, right? It doesn't take months or years. It takes years and years and years, but this is a slow, long time coming, right? And we can see the algorithm that Bitcoin is following and abide by, and this cannot change. There's no person that says, there's a recession, the Bitcoin's going down, we need to change this in order to prevent Bitcoin's bear market. Like there's no such thing as that. There's going to be pain, there's going to be suffering. On a minor capitulation, there's going to be mining businesses that are going to go bankrupt, that are going to go out of business, people are going to suffer, and it sucks. But that is the cycle. If you don't have enough efficiency in your mining business, when there is a mining squeeze, you're going to get bankrupt. You're going to go out of business, and that sucks. But that's life. That's free markets. If you're not efficient, you got to get out. And this is, in my opinion, the most free market, the cryptocurrency market. It's unbelievable. So we can see the last quote here: any change to these parameters requires all Bitcoin participants to agree by consensus to approve the change. No governments do that. Did you have a say? Yeah, I think we will, quadruple the the balance sheet, just, to save ourselves from a recession. There was no consensus. It was a small group of individuals who decided that it was a good idea through their theories. And now they're talking about modern monetary theory that basically states that they can print as much money as they can as long as it's within their own currency. It's a little bit more confusing than that, but basically if they're purchasing their own debts, the circle can just keep on going. Look at Japan. They've been doing it for years, and they're still holding on. So why can't the government of the United States do it? And they definitely will. And then we can see a chart here. Might not be able to see it too clearly, but we see the first halving there, and then we see the second halving right there. Maybe you can't see it too clearly, but we talk about the previous halvings pretty often. But yeah, very interesting article that we have here, just talking about the comparison of Bitcoin, how it's actually being a deflationary asset over time, and what a different monetary system could look like, where there is a fixed algorithmic code that is in place that is not controlled by human emotion, by greed, by fear, by irrational thinking. It is just an algorithm that does its job from start to finish without any thoughts, different people coming into power to have different opinions and thoughts. It's just a simple criteria that it follows. And in my opinion, that's phenomenal, because you don't have human emotions interacting with the monetary system that Bitcoin is, which in my opinion is a really, really good way to go about creating a more stable source of money that is true money. Like gold is true money, right? It's God's money because it takes energy to mine it. You can't just print more gold, and BTC is the people's money, right? Robert Kiyosaki, guy who was the author of Rich Dad Poor Dad, said that, and I completely agree. Now we're going to talk about the correlations, because right now we're actually seeing a pretty high correlation with stocks and Bitcoin, which I know sounds very odd because we always try to compare Bitcoin to some sort of anti-fiat that would be in the same basket as gold and silver, because gold and silver are precious metals that are going to be safe havens if the currency market fails. And a lot of people did bundle BTC and cryptos into that, and I do as well. But right now, we're not seeing a huge positive correlation between gold and BTC, really. And we'll talk about correlations right now. So this was before 2020. Right, this was, we can see, so this was since 2010, and I don't exactly know when so this was in 2018. So this was basically from 2010 when BTC was created by Satoshi Nakamoto until around 2018, before 2020. So this was kind of like the run-up to. And let's just zoom in here. We can see before 2020, before this whole recession, COVID-19 stuff happened, Bitcoin's not very correlated with the US stock market at all. It is almost no correlation. We see that the correlation, this is the, it might not say it right here. So this is the Pearson's coefficient of correlation. So the 1 would be a direct correlation. The US stock market is directly correlated with the US stock market, right? And the emerging stock market is 0.8, which is pretty highly correlated. 1 to 1 is the highest, 0 is zero correlation, and then if it's negative, it's negatively correlated, meaning that, for example, in Bitcoin bonds correlation, if Bitcoin goes up, bonds actually theoretically should go down, and if bonds go up, Bitcoins theoretically should go down, because the correlation is negative. But we can see that there's no real correlation between emerging markets, US stock markets, developing markets, bonds. There's a tiny bit of negative correlation, not really. Real estate, not really. Commodities, not really. So Bitcoin's in a world of its own, but within recent times, we're actually seeing a lot more correlation than we kind of like. And we talked about this within the Discord. Let's just find it right here. It's in Bitcoin markets, and there was actually an article that we went over recently that went over the correlations just within kind of the recent months here, where we had the COVID-19 crisis in the stock market, and then BTC took a nosedive as well. And it is coming up here. Might not find it soon enough here. Yeah, I think we'll wait till another one. I think it was a little bit further back. But basically, we're looking for correlations between other assets in the market and crypto. And this is another one. This date's actually from 2015. And I'm actually looking for something that is able to give me more data, because right now it gives me a lot of information for the different assets that you can look at. You can look at some currency pairs, AUD, Euro, GBP, USD, JPY, and then you can also see there's gold and silver, copper, crude oil, S&P, and it'd be even FTSE. So this is London, Nikkei, which is the Japan stock market. This is the London DAX. I don't exactly know, but yeah, there's a lot of commodities and indexes there, which is great, but this only dates back to 2015. So I'd really like to have a updated version of this, because this would be extremely handy, having 50-day, 30-day, 60-day, 90-day, 120-day correlations. If you just hover over it, it'll give you that exact coefficient, or Pearson's coefficient of correlation there, which in my opinion is really, really handy. So I'll let everyone know if I do find a resource that allows us to find more recent data. This is from 2015, so it's basically irrelevant at this point, but yeah, we'll see if I can find it. This is the best correlation for 2020 Q1 I can find. This is actually from Binance Research, so very valid. Binance is the largest trading exchange for cryptocurrencies by trading volume. I use it. Great exchange all around. So this is the correlation between the daily business returns of BTC, CMC 200s, and traditional financial assets in the first quarter of 2020. So, just talking about this before diving into the charts. Regarding correlations, BTC displayed a moderately positive correlation with U.S. equity indices, coefficients of 0.57 with the S&P and 0.64 with the Russell 2000. So it's out of 1. So that's pretty well correlated, right? And this was before the whole COVID crisis in the stock market and BTC. So with the S&P being 0.57 and the Russell 2000 being 0.64, that's pretty correlated. And in my opinion, that's not really good right now. And the VIX, which is the volatility index, is pretty well negatively correlated, 0.47, which makes sense. Gold is basically non-existent for correlation, 0.09, so we can't assume that there's a correlation with gold and BTC just yet. Silver, negatively correlated, which is actually kind of not a good thing, because silver is going to be a more speculative precious metal compared to gold. And crude oil, negatively correlated, and 20-year treasury bills is going to be negatively correlated as well. So as of right now, BTC is more correlated with the stock market, with equities, with those traditional financial assets compared to more safe haven type of assets like gold and silver. So definitely something to consider, because you know, a lot of people are thinking, wow, gold and silver and Bitcoin are all going to boom because all fiat currencies are going to go down. And yes, in the major macro picture, I do think that is going to be true, but I don't think that it's going to happen in an instant all at once. It takes a long time for the psychology of an entire economy, an entire population to change, to suddenly agree as a whole entire community in consensus that we don't trust this currency and we don't have confidence in the value that it's holding. And at that point, I do think that we will start to see a push into crypto, because we've already seen failure of fiat currencies in recent times. Look at Venezuela, look at Zimbabwe. They have had failure of a currency, right? They had hyperinflation, meaning that the value of their currency is going down at unprecedented levels, staggering levels, where let's say you have $100 worth of value today, you might have like $50 or like $25 worth of value tomorrow. That's how fast it was hyperinflating. And at that point, you're wanting to get rid of the currency as fast as you can. So there's a pivot point where it goes from inflation to hyperinflation. And in my opinion, that point of the shift is when the velocity starts to bend substantially. Because you can print a lot of currency, but if the velocity is going down, you're not going to get that substantial inflation. When you combine the increase in velocity with money printing, that is when you get the true hyperinflation, because there are two ingredients to inflation. It's not just the increase in supply of a currency. That is only one part of it. If the velocity of the currency is going down substantially, you won't really see the inflation too much. I think that's why we're not seeing too much inflation for more of the goods and services in the Western world, with QE here. Yes, you did get inflation in real estate markets and financial assets. They saw absolute boom, and that was inflation just in those financial assets, making the rich more wealthy. That's not their fault. They just own more assets, and with QE, that money goes into the financial markets and it boosts up the stock market. You gotta get some exposure in there. But in terms of the longer term time frame, yeah, I just don't see it sustainable. It really isn't, and that's the view I have. And yeah, I do think gold, silver, and crypto will go up, but in the short term, I think that there's going to be more deflation, and I just don't see a bull run happening just yet with Bitcoin. We'll get into the charts right now. I just wanted to kind of dive into more of the global macro stuff, because we do provide a global macro update for people to see as well. But in crypto, we don't talk about it as much, but I thought that it would be good to discuss the more long-term outlook that we have on crypto. Yes, we are super bullish on the whole blockchain space, but I don't think that it's going to be as quick as many people think. With the correlation with the stock market, with BTC's halving coming up, in the short term, I do think that there's going to be another bear market here. So that's going to be the blog posts for today. Let's now jump right into the charts here. All right, just making sure that we have everything still looking good for the recording. Awesome. All right, so let's zoom out to the 4 hour here and then just talk about the 1 hour, because we're just basically just commentating what's been going on, which is just a very, very slow consolidation, which is not a bad thing. And in my opinion, we see a nice little squeeze here, so let's get our snip. We're not going to do anything. We still have our long trade, and we're still long biased until we hit kind of closer to that $7,700 zone. So we broke this level of resistance. We got this little squeeze here. We pushed to the upside, and now we're really getting a similar type of situation where we're getting a squeeze. We see a series of lower highs, and we see a horizontal level of support. We did get a really big bounce at that zone right there, where our price dropped, but then it recovered very, very quickly. So that just shows me that there's a decent amount of buy pressure within the area. We did have an ascending zone, but that broke, but then it did recover. So in my opinion, it is setting up for the last little push to the upside. If it doesn't exactly hit 77, I'm fine, but I am expecting a higher high to be created, because we can see a high here, a higher high here, a higher high here. I think we can get that little squeeze out for the last little push, and that's kind of all I'm looking for. And then at that point, definitely wanting to be taking profits kind of around there. I was super, super patient, held this consolidation, held this move to the upside, held this consolidation, and I'm looking for that last move to the upside. Gonna get a little bit of coffee, and then we'll continue. But that's going to be my analysis for BTC. I could draw in some ascending zone connecting the high, higher high, and the higher highs, so we could see that last higher high get connected with a little bit last of an aggressive push to the upside before sliding back down. But once I do close this long, at this point I'm in the profits. I already have my stop loss at this zone, and it'll go up to some degree. If it doesn't, I'm in a risk-free trade with exposure to the long side. Who doesn't love a risk-free trade? I love them, and that's what we're currently in. So my very, very short term, I guess, for this week, and until we hit 7,700, I am a little bit more bullish on BTC. But in terms of May and next month's outlook, I'm pretty damn bearish. I've been bearish for a while, and I did take this counter trend trade because I flipped my bias, because it broke and we got stuffed the first time. We got stuffed the second time because we shorted right here. We shorted, I believe right here. I don't exactly know. Maybe it was right here. But we shorted twice. We made good money on one of them, and then we lost a little bit of money. We reduced our risk, but we still ended up not putting that stop loss right to break even. So we lost a little bit of money on this pump here. but we made money on this one here. But regardless of that, we saw 2 rejections where we could not get that price to go lower. We got a strong move up here. We got a strong move up here. So we're like, okay, there's going to be buy pressure to some degree. And once we broke this horizontal level of resistance, we changed our bias. We flipped our bias and started to look longs. And yeah, it worked out favorably. We're in the money now, and we got our stop loss here. So we are guaranteed to not lose money. But what we're looking for is, when this long does end up being closed, let's say we end up making our last push up here. That's great. We took our profits. We're happy with it. But what we're looking for is a failure of this ascending zone. We got an anchor point 1, 2, 3, 4 touches, 5 touches, and now we're getting our 6th touch. Not perfect, but right there. And what we're going to be looking for a short is a failure of this ascending zone. So we got an ascending zone. We're looking for a horizontal zone to create our level of confluence. Once we see the price go below our level of confluence, we're looking for a pullback either at the horizontal zone or to the ascending zone. Either way, we want to stop loss above both zones because the price could wake up to that zone. But we want to see not just 1 rejection, but 2 rejections before we look to enter, because it could just be a small pause before continuing to the upside. So we want to make sure that there is validation within a key level of resistance before looking to short. But that's going to be the opportunity that we have in play. We already talked about the different options that we have for BTC. And if you've been following us for a while, we are very we're very consistent in how we approach the market. We have a system that we can replicate over and over and over and over and over and over again on, a similar type of market structure. And that's how you gain an edge, is you just do the same thing over and over. You avoid everything that is not within your wheelhouse or your edge, and you take what you have, basically. And if you don't see something that is not within your wheelhouse, within your edge, you don't trade. Very, very simple as that. It makes it a lot more easy when if you don't know what's going on, you just don't enter. Very simple. If you know what's going on, if you have an edge, if you've done it 1,000 times before, well, then you have an edge because you've traded it. You have experience trading that. Over a series of trades, you're able to capture some profits there. So this is the 1 hour. We've already entered our trade, so there's not much more to do. We enter right here. And then now we see a descending zone connected lower highs. We see a low, a higher low, and a higher low. We could draw an ascending zone, creating a symmetrical triangle. But at the end of the day, I'm going to give it a little bit more space and say that we're holding a previous resistance, which is now holding as a new level of support just above the $7,000 mark. So in theory, I guess we're holding a descending triangle a little bit, but for me, it's more of just a consolidation, and I'm waiting for that last leg up, breaking the market structure high of around 7,400, potentially hitting 76, 77. I'd be really happy with that. Then this trade would be a great success, and then we just look for the failure next to the downside, because this was a counter trend trade in our view. All right. Also, we're looking at Bitcoin for the people on TikTok. That's going to be basically the analysis for Bitcoin. Let's quickly look at the supply and demand of Bitcoin. So let's try to get this not on the 4 hour, on the daily here. There we go. All right. So this is going to be the margin trades that are open on Bitfinex for longs, which is this green or blue, and the shorts that are red, which obviously makes sense. So we saw no real amount of buy pressure at all, slowly making less lower lows, but it's super aggressive here. This is when we had that massive sell-off, and then when we started slowly seeing the price recover from around 4K upwards, we started seeing a consolidation, seeing less aggressive lows, and then once we saw the break above the around $6,800 zone, we saw this strong push to the upside. This is kind of where I entered as well, because I saw the consolidation form, right? So it's pretty easy to understand. This is a major sell-off, and then you see a consolidation, and then you see the confidence from the buyers come back in. Major sell-off, I saw this as some sort of consolidation. I saw it as a little bit more of a descending wedge. Obviously, this isn't price action, but I kind of saw it like this, and once we saw a break in the $6,800 zone, we saw a wave of fresh buyers enter the market, and that's why I was kind of looking long, and then the sellers at that exact same time are just consolidating, They're probably waiting for that sell-off to come in, which in my opinion I am as well, but I don't have any shorts on. I'm patiently waiting until I have more validation. But right now, the shorts are just going sideways and not really putting on any positions. But in my view, this is a squeeze, and in time we will see most likely the shorts get another wave, because this is our first wave consolidation. I think we're going to get another wave when we do get that second push to the downside that BTC is potentially going to have. Obviously, we can't 100% guarantee anything, but we've been speculating that the bottom is not in, or at least the bottom will get tested again if the 4K zone-ish is going to be the bottom. But from where we currently are right now, plus $7,000 to $4,000, obviously that's a substantial move that we are going to be looking for a trade. But yeah, that's going to be the overall analysis for BTC. Not really going to go on the weekly or anything, because we've already talked about basically kind of the outlook that we're going to have within the smaller time frames. We do these every weekday, so you'll definitely get noticed before we even look to enter short. There's a lot of things that need to happen before we even look to short. In my opinion, we still got a little bit last toothpaste push, squeezing the last little juice out of the lemon up here to around 76, 77, and then we'll potentially finally get a failure here. But that's going to be my view of the market for Bitcoin. To be completely honest, I could have played this long opportunity better to the upside. I really could have. I only entered BTC because of my larger long-term bias still being short, and I did skip out on some really good opportunities. I talked about Link yesterday. You could watch it in a YouTube video, and I literally said this looks like a pretty good opportunity, but because I'm already making money on BTC, and I am making money on BTC, which is not a problem, I could have made way more money trading Link, but that's okay. I was waiting for the move to the downside, and I still am. I still am. And, you know, my bias that I'm more short kind of did inhibit me from trading Link. But that's okay. That is 100% okay. Because in these times of uncertainty, of high volatility, in my opinion, within the major market moves, there's going to be a lot of noise. And what do I mean by this? Well, in my opinion, there's going to be like major meat of the move moves that are going to be taking place. For example, like the huge 20-30% moves in Bitcoin and the S&P. Those are going to be the ones that we're going to be looking for, not these exhaustion pushes to the upside that are counter trend, contrarian trading. We're wanting to go with the trend. We're wanting to go and trade with the trend because the fundamentals are on our side. For the more global macro, we'll talk about that. For BTC, we have the correlation with the S&P being high, above 0.5, which is pretty substantial, in my opinion. And that's number one. Number two, the BTC halving will cause a lot of the supply to get introduced into the market once the BTC halving does end up going. I think May 14th is when the day is. After that, the amount of BTC miners' rewards will get cut in half, and they'll have to sell more BTC in order to basically pay for their expenses, really, because it's going to be a squeeze. It's going to be a squeeze. Look at the previous mining video that we talked about, that we did. I really explained my thoughts on it, how it could affect the price. But in short, I do think that the miners are going to get squeezed yet again. The inefficient miners are going to have to get extracted out of the mining network because they're too inefficient, and only the most efficient miners are going to get left behind and are going to be able to sustain the network. And that's what our speculation is. That's why we haven't been entering too long. Like I should have entered this link theoretically, but hey, that is all right. Still made money on BTC, and we're going to be looking for that short opportunity. So let's now go into the alts here and discuss the different opportunities that we had here. So this is that trade that we had. We talked about this within the last video. This was looking at the 4-hour key level of resistance at 260, broke. We formed a solid level of resistance with a series of higher lows. This is a key level of an ascending triangle. We broke on the 1 hour to the upside, validated the previous resistance as a new level of support, and really blasted off. We saw that there was a lot more buy pressure than sell pressure, showing volume accumulation. And VSA checked out, market structure checked out, price action checked out. It all looked really, really great. Broke a major structural 260 zone, and it was holding higher lows, really bullish all around, super happy with the outlook, but I just did not enter because, mainly because I'm just not convinced that this is the bull run. We're at the high of, in my opinion, the exhaustion phase. And I had no risk on the table entering this trade, or sorry, keeping this trade on. I have zero risk on the table on Bitcoin. But if I entered Link, I would then have risk on the table. And yes, you are always having to put on risk if you're entering a trade, but with, in my opinion, a major short opportunity coming into fruition in this upcoming month, I'm going to wait for the massive, massive dump to take place so I can just reap the rewards of being patient. I kind of look at it as a big short, like if you're in the big short, are you going to be looking for little scalps to the upside and then trying to time that short perfectly, or are you going to be patient, systematically wait for your perfect time to pull the trigger, and when all shit is breaking loose, you are profiting extremely well compared to everyone who didn't see that next dump coming? So I guess I'm a bit of a contrarian compared to a lot of the perma bills in the market who think that the Bitcoin bottom has already taken place. I do not think that we're going to continue going up. I think that there's going to be another dump. I don't know if it's going to break 5K, 4K. I don't know if it's going to break that previous low. But from 7K to 5K or 4K, that's a huge move. And I'm very, very open to being patient for that move to occur. So that's mainly why I didn't want to trade Link. Like the trade plan I had was I just saw it move up, so waiting for the confirmation pullback wouldn't be a bad idea. Also waiting for the 1 hour candle to close to show that confirmation is present from the bulls isn't a bad idea either. So let's say you entered at the completion of the 1 hour push to the upside. Stop loss would just be below the previous low, and then if you're looking for a risk reward of 2 to 1, that would be a 2 to 1 risk reward right around there. So then if you're looking at that next key level of supply that I drew in around $3.50, you're looking at a risk reward of maybe 2.8, 2.7, which in my opinion is a pretty damn good risk reward parameter. So that was a great trade that played out that we were not in. I can't say that we were in it because I wasn't, but that's okay. You're not going to get every single trade that you see, especially in a 24-hour market. But that was one that I definitely should have seen. I was up at it was in the early afternoon or kind of before morning, and kind of kicking myself, but that's okay. Ethereum is the next one. Ethereum didn't get that much movement since the last time we spoke, so I'm not really going to talk about it too much. We see an ascending zone that's holding, and there's not much more to talk about. I think there's another level of confluence right around there. That's going to be another minor level for support, but yeah, we don't see much failure to the downside, so we're not going to be looking for any shorts just yet. We do see this descending zone creating a level of confluence with our previous resistance, as we can see around 180, so it's consolidating below that zone right now. If we do see Bitcoin's last little push up, we could see it actually hit right at our 180 confluence zone, which in my opinion would be a pretty good area to be looking for shorts, as long as we see a nice zone where you're getting a lot of sell pressure. Maybe you see an ascending zone on a smaller time frame like this, and then you see a failure here. That could be your failure entry, and then once you see confirmation breaking the more major zone, then you could add your full position. But right now, Ethereum doesn't look like something that we'd be looking to enter just yet. So a lot needs to happen before we get interested. All right, XRP, similar with yesterday, we see an ascending wedge here, still looking for shorts in the market. We see it poke out, kind of have that final move to the upside, blow off top as we call it, and now we are seeing the price hold a key level of resistance and some higher lows. And then jumping onto the 1 hour, we do see it's a pretty well respected consolidation here, and it's just a matter of, for us, looking for a short when it breaks down below our first resistance right here, which is probably a good area to potentially look for a feeler trade, which might be like 10 to 20, 30% of the actual position you're wanting to enter. So then you get less risk when you're entering here because of the stop loss moving down. And then once you actually break the major level of support for this ascending zone, that in my opinion is the highest level of confirmation that you're going to have for a short opportunity on XRP. So that's going to be the way that we're going to have we're going to be trading XRP. We're not going to be looking for longs because of the bias that we have within the market. You know, we've been talking about this for days and days or weeks even, so, you know, we're consistent with our message, basically. BNB, same thing. We could get a little pop off top here, but let's just look at the 1 hour. Looks pretty good in my opinion. This is a nice little triangle that we're forming like so. Let's make it a little bit bigger. Let's make it red because it's a resistance. And then we got our nice little support zone like so. So we got a nice little squeeze here that could push the last little bit of the squeeze from the lemon up to $16 probably, and if we look in the smaller time frames, that actually wouldn't be a bad trade. But at the end of the day, like I said before, ascending zone pullback, and then we're probably going to look to enter if it does break this zone, if it does position us into a good opportunity for a long. But right now, I wouldn't be surprised if we get a little squeeze to end off this exhaustion move to the top here. Wouldn't actually be a bad trade here. Looking at the risk rewards, as long as you're well managing your risk, this is a pretty well respected chart pattern all around. Actually, very well respected throughout the entire chart here. Let's just make that a little bit wider, and then we can put a projection on here, kind of like so, and then make that green. So this is currently what we have in the market, and let's just put a horizontal zone just like so. So once it breaks that zone, probably a high probability situation if we go like this, if we go like this, and if we go like this. Maybe a little bit more room here. So what are we looking for this last little push to the upside, last little squeeze of the market? So we saw a descending zone, descending zone, descending zone right here. And once that breaks, that's our first confirmation of the break in the symmetrical triangle. We see that triangle right here, very clearly identifiable. And what we're also looking for, is going to be a market structure shift. And previous high of the market structure, we can see rejection, 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 rejection. So once we see that higher high come in my opinion, that's a pretty good opportunity that we're going to get an extension and a continuation to the upside after the consolidation. And what we're looking for is a previous market resistance right here to be held as a new level of support in confluence with our descending zone. So that, in my opinion, that 15.15 or 15.16 zone is going to be, so let's just write it, 15, that was a terrible 5, there we go, 15.16 USDT, right? That's going to be the zone that, in my opinion, you're going to get the highest probability to be looking for long after you get a higher high, and then you get the higher low. This is a high, this is a low, not a high. That's a low, this is a low, higher low, higher low, higher low, higher low coming in right here before the last impulse push, getting us a quick little scalp trade, day trade that we'd be looking for BNB. So in my opinion, that's going to be the opportunity of the day for the day trade here. Because I'm already in Bitcoin, I'm not really looking to get too much exposure. I don't want to FOMO because I missed Link. I psychologically, I know that I missed Link, and I know I'm a little bit upset about it because that would have been a great trade. And when you are not upset, but when you understand that you missed a trade that you think that you should have taken, you'll automatically want to take another trade to make up for those lost profits. And you have to understand that and basically be self-aware that you are not going to ever make up for a trade. Every trade is different, right? So you gotta bring a fresh perspective and a fresh mindset to each trade. You can't look back at the previous trade and say, shit, I missed Link. Okay, well, BNB kind of looks similar. I gotta get this on BNB because I missed Link. Every trade is brand new. Every trade has no correlation with the previous trade that you took, right? Other than your own psychology. So you gotta completely wipe your mindset, I guess, clean and start from fresh. So yeah, in my opinion, this, not thinking about Link, not thinking about any other trade, in my opinion, is still a high probability situation that could occur. And we got pretty good risk reward parameters here. If you're limiting risk to maybe 1.7, you got a risk reward of over 3. In my opinion, a risk reward over 3 is a great risk reward parameter, and that's mainly what you're wanting to be looking for, in my opinion, for this trade on BNB. I'm not entering yet, but we'll we'll see how it goes. I do think that that last little push could come from BTC. EOS is going to be the last one. We're just at a key level of resistance, so not really looking for any trades. Basically, I'm sure you understand exactly what we're looking for. Just like every other pattern, for a short, we're looking for a failure of both a horizontal and ascending zone before we look to enter short. That's going to be the overall analysis for all our alts that we're going to be looking at. Hopefully you got something from it. BNB is kind of the only actionable item that we're going to have for today. No real other things that we're going to be looking for, so I'll keep the Performante team updated if I do enter here. But yeah, definitely going to be still cautious, don't want to be aggressive or anything, and still wanting to have that short come into play, so then we're early in that downtrend. So that's going to be the crypto market update. I really hope you enjoyed it. I will answer all the questions provided on the TikTok and YouTube. Don't really have any questions on YouTube, but I will go over all the questions that people have asked. So thank you very much for watching this crypto market update, and until next time, have a good one.